All right, we are back at it here with the official word confirmed by Cedar Fair and SeaWorld that Cedar Fair has declined the offer of their takeover. Before we continue, I would like to ask you to hit that like button as it helps us out against the YouTube algorithm. If you like videos like this and also like any of the following, beer, amusement parks, travel, aviation, Detroit sports, yada yada yada, you'll want to click that subscribe button and also ring that bell to make sure you get notified when a new video drops. So this video is just a news update. It's rather quick, I won't get into much, very informal, and it was just put together kind of quickly, so that's why you just see a lot of random videos bouncing all over the place. Thank you to all of the channels that supplied those videos. You'll notice the credit on the videos, and they'll also be at the end. And like I said, just really, really informal. I mean, you even hear me sipping on my coffee there, so yeah, we're just going to kind of discuss this a little bit. It's really no big surprise that, the deal didn't go through. That was probably the most likely thing that was going to occur, was the deal wouldn't go through. Slight chance that there would have been an actual sale. And then outside of that, not a good chance at all of a merger or Cedar Fair flipping the tables. And we'll kind of dig into that a little bit, but mostly this is a news video. Shouldn't be super long, not too much in the way of financials. Just kind of looking at things on the surface again as to why it didn't happen. And of course, I'll reference the last video a bit. Even though I seemed enthusiastic that it would happen, I didn't think it would happen. I was just pointing out that this offer on the surface was a lot different than the Six Flags offer, and that's why it was taking some time to go through it instead of Six Flags just being declined right away like last time. And the cash offer was more lucrative, but we'll get into why it wasn't lucrative enough, even though it was all cash. It was a little too low. But anyway, I don't want to just ramble on here and spoil what we're going to get into because I have kind of a layout here. It's very informal, like I said, but here we go. We're going to get to it. Ah, crap. Actually, before we get to it, I just wanted to include a few little things in here. One, I do believe that this is what's best for both companies at this present moment. As I'll get into a little later, I'll say that the attempt at an acquisition came at what I believe is a wrong time. The wrong time, not a wrong time. The wrong time. And once again, I am shareholder in SeaWorld Parks Entertainment and a unit holder in Cedar Fair LP, Master Limited Partnership. And I do believe the values of both of these will continue to increase. And that's why I honestly do believe that this is what was best for both, because Cedar Fair's unit price, and once again, this is not financial advice. I'm not an analyst with this stuff. But I do believe their unit price is going to exceed what SeaWorld would have been able to offer. And I do believe that both park chains will be all right moving forward here. But I just wanted to throw that out there that I do believe this is what was best for both where we sit at this present moment. All right, so no big surprise as stated, as it was still the most likely option based on price, but Cedar Fair did decline SeaWorld's $3.4 billion offer to acquire the chain. Well, I did say money does talk. Even a full $3.4 billion in cash is just too low, especially with how much headway Cedar Fair has made per the earnings call on February 16th. Part of the reason that the Six Flags offer in 2019 was declined so quickly, even being worth $4 billion, was for a slew of reasons. But one was that the majority of the deal was in stock. Outside of that, that was proposed as a merger offer, and it could have lost Cedar Fair its master limited partnership status. Even though, as we've learned, they did pull in the Paramount Parks underneath C Corporation, but overall, they are able to hold their master limited partnership status. Remember, the board is there to do what is best for the unit holders, and right now, retaining the master limited partnership status is the best for the company and the unit holders, no matter the sale price. But once again, it's what's best for the unit holder, so the price was definitely too low. So if it's too low, it's not what's best for the unit holders at all. SeaWorld's offer was definitely too low. We already knew that. While being all cash was more lucrative, as stated in the previous video, it was still barely over market cap at that time and didn't include any other values. And I don't really want to get into what EBITDA is for you guys because I'm sure that a lot of you, are just here for the news update. You're just theme park enthusiasts, just want to see what's going on. If you factor that in, the sale should have been worth a lot more, or the potential sale. And of course, yes, it included the assumption of Cedar Fair's debt, because that more than likely would have been rolled into it. But still, you'll see that $3.4 billion was definitely too low, especially when it comes to unit holder equity here, and what unit holders should be able to get out of this these units, which I think are relatively still undervalued. But of course, we're still crawling out of the pandemic. We're going to see how the industry does. But anyway, even if the debt was factored in, sometimes, SeaWorld would have had to borrow money. They would have had to leverage debt to be able to go through with the purchase. And sometimes that could hurt, short term, long term. So it's kind of good that didn't happen, like I said. But however, once again, even though it was $60 per unit that they were offering, that SeaWorld was offering Cedar Fair, no one comes to the table with their best offer first. That's simply just how business works. You come to the table to get negotiations going. Obviously, negotiations went on for quite some time, but everything came to a halt on February 15th, with the most likely news break of the sale being declined. On February 15th, 2022, SeaWorld released this statement on their investor relations website, and I quote, "In response to inquiries from various stakeholders, we confirm that our offer to acquire Cedar Fair was rejected. Unfortunately, we do not see a path to a transaction." On the morning of February 16th, 2022, Cedar Fair hosted their Q4 and full year earnings call. CEO Richard Zimmerman made a statement regarding the offer before saying no other comments at this time. In the statement, he brought up that the initial $60 per unit offer before saying that SeaWorld upped it to $63 a unit. The offer would probably have to exceed well beyond $70 a share for negotiations to really take off. SeaWorld didn't have much interest in offering above $63 a unit at this time, it appears. Considering that fun units are hovering just below this mark, and with the way the industry is poised to recover, it is probable that units will be worth more than $63 within the next 3 months to a year anyway. Cedar Fair is extremely confident in their long-term growth, and the decision to turn this down was due to the fact that they have confidence that they will continue to grow and that the units will be worth more. They also plan to reinstate quarterly distributions this year, possibly by Q3. SeaWorld has yet to reinstate any distributions. Unit and stock-wise, I do believe the future is bright for both of these companies, and a sale or merger would have made some sense, although the price was super wrong. I do believe that this came at the wrong time, as previously stated. Truth is, we're still working to come out of a pandemic. Both companies had rough 2020s, but started to look better in 2021. And 2022 looks really good. Cedar Fair is planning events and reintroducing 2 hotels that were just renovated for the Cedar Point property, being Sawmill Creek and Castaway Bay. SeaWorld is opening many new attractions, including Iron Gwazi, Icebreaker, Emperor, Pantheon, etc. And that should help their bottom line as well. In fact, waiting to open those until 2022 was a rather good business move. Both chains are poised to expand, but acquiring a whole chain isn't really the best move right now. Not just from a cost perspective or a debt perspective, but just based off of what we knew their expansion plans were prior. So why would a sale have made sense if the price was right? Well, cost synergy for one. Big one with the combination of the two. Even though it wouldn't really have been a merger, but you still would have had the cost synergy absorbing that. And also, SeaWorld doesn't operate too well in the season pass department. Well, at least compared to Cedar Fair. The theme park market in the United States is rather fragmented and brand loyalty is big. Mergers and acquisitions are just bound to happen. Not too frequently, but bound to happen. Cedar Fair does really good with season pass sales, and they have that brand loyalty with their parks. If SeaWorld were to acquire those markets and the brand doesn't change, then they would do better with season pass sales. In addition, the Platinum Pass umbrella would do well in certain markets. SeaWorld already has the SeaWorld Orlando and Busch Gardens Tampa markets, they have the 2 parks operating in different markets, but they're just right down the interstate from each other. And of course, they have, once Sesame Place San Diego opens, that'll be right down the road from SeaWorld San Diego. So you got a little bit of that. Of course, the 2 parks are really different. One's geared toward kids, but they have that. But what would you have had with the purchase of Cedar Fair is you would have had Kings Dominion and Busch Gardens Williamsburg near each other. In a way, you would have had, Dorney Park and Sesame Place kind of, just about an hour and a half from each other in Pennsylvania. And if you really want to count it as a compliment here, you could also have Knott's Berry Farm up in the Los Angeles market with the San Diego properties. Of course, this is all just what ifs, but I think that it would have helped SeaWorld. In addition, SeaWorld would be a lot more geographically diverse now. And SeaWorld still has that brand loyalty, but things have been kind of under a black cloud since Blackfish, no matter what your beliefs are on it. Ever since it was released, it just kind of has been that way. By acquiring Cedar Fair, hypothetically, they could have taken over the Cedar Fair name, kind of like how Premier Parks started using the Six Flags name after they acquired them. And that's the old Premier Parks, by the way. This is what happened back in the 90s. This isn't, Premier Parks is back, and Six Flags is still operating. This is back, okay? But then they still could have run the SeaWorld Parks as their own brand under the umbrella of Cedar Fair, kind of like how Busch Gardens is its own brand under SeaWorld Parks Entertainment, or how Schlitterbahn is its own brand under Cedar Fair. All in all, it's just a hypothetical that could help. They could have always run Cedar Fair as its own brand under the SeaWorld umbrella or whatever, but this just really could have helped them out, is all I'm saying. But this just wasn't the time beyond the statements of price and how the two chains will recover this year. Expansion looked way different for both before and during the pandemic, that something such as this just didn't make sense at the moment. Cedar Fair was interested in expanding, especially in real estate, hotels, sports force parks, and maybe single properties, such as smaller parks here and there. This was seen during 2019 with the acquisition of the Schlitterbahn water parks, and as well as their brand, and Sawmill Creek in Huron, Ohio. Now I should point out, real estate, that was more so development of real estate that could fit within their portfolio. Of course, as long as they stick with their founding of their master limited partnership in that realm, they'll be able to keep their master limited partnership as they expand and acquire other properties. So as long as they kind of kept everything on that fringe, they'd be able to keep their MLP. Now, the reason that Cedar Fair didn't counteroffer SeaWorld, because a big purchase like this just isn't on the horizon for them. This is the same chain that made waves by purchasing the Paramount Parks back in 2006, and they aren't ready for that large of an expansion again, quite yet. While they are ready for and anticipating long-term growth, a big focus is on paying down debt and reintroducing that quarterly distribution. A large purchase like this would hurt the debt load and throw all of their model-based plans off. So this was kind of a good move by them. Actually, it wasn't just kind of, it was a good move by them, especially because the cost was just too low. On the SeaWorld side, a large chain purchase, while it strategically does make sense and would diversify SeaWorld's portfolio, something that they are interested in to turn all of the big focus away from just animal shows, and would make SeaWorld more geographically diverse, SeaWorld expansion plans in the middle of the pandemic were quite different than buying a whole chain. Now, of course, pricing. You got to think of SeaWorld's debt as well. You got to add that in. So, of course, adding more debt in, having to borrow more to purchase something else, launching yourself in the farther debt, kind of didn't make sense. But overall, eliminating all of that, strategically, an offer like this did make sense for SeaWorld. Now, you got to remember, too, SeaWorld is also expanding in a way. They're licensing their name, even though Mural is operating what's going to become SeaWorld Abu Dhabi, or they own it, I should say. Mural owns it. SeaWorld is going to be operating it. It's going to open on Yas Island, just near Ferrari World, actually, kind of northeast of there. And it's going to be the first SeaWorld park without orcas in it. So SeaWorld is looking for that. They are looking to license their name, and then operating parks with other owners. So SeaWorld's looking to expand like that, but their expansion plans were also quite different in the middle of the pandemic, as CEO Mark Swanson said in August of 2020, and we are going to close with this statement, and I will quote directly from him. He said, "There might be situations where there's market dislocations or competitors in industry who aren't able to weather the storm. So whether it's a water park, a hotel, or something like a park that we could look at and convert to a Sesame Place, for example, those are the type of things we're talking about." So that means that they are definitely looking to expand, but more so expand with properties or competitors that would struggle in recovery of the pandemic. And honestly, that is not Cedar Fair. There's no struggle there, and it's not a small purchase either. And I totally screwed up. I should have said market dislocation, not market dislocations. For the record, I'll admit to my mistake. So that's that. The two will not become one. Some people are happy, some people are sad. That's just how business in the amusement industry works. It is what it is. That's how it goes. Guess what? It's not changing what the parks are for you guys right now. If you still enjoy going to them, then that's that. Things are going to remain. So for me, it doesn't change much. I'm still big believers in both companies and cannot wait to return to the properties. 2022 will be a big year for many in the amusement industry, and I am excited to see where the business goes. So until next time, if you like content like this and want to see more fun amusement park content, make sure you like and subscribe because we have some fun ones coming your way, including some videos of the Universal Orlando Informer meetup that happened there back in November, trips to some of the Disney parks, actually all 4 Disney parks, So you're going to want to check out those videos coming soon. Got a lot of fun stuff coming your way. And of course, all of the other stuff that we cover. Don't forget about all of our social media channels listed below in the comments. We're on Instagram, Twitter, Facebook, TikTok, blah, blah, blah. If you like beer, add me on Untapped. I'm on there, Brett Beer Adventure. So yeah, head on over to www.universeadventures.com and subscribe to the blog there as well. I'm going to be getting some more content going up there. And we're going to, speaking of synergy, get a nice synergy going between both the channel and the blog. So then that way it's just really cool and really fun and yeah, I'm excited, all right? But until next time, everyone, ride on. Thank you for watching. And future is bright. And the future is what you make it.